Aloha. Hello, everybody. It's Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net coming to you with the June 17th stock market wrap-up for you to use on June the 18th. First off, let's look at the New York Stock Exchange. What we can see here is that we've pulled back to the 50 and 200-day moving average, and the 50-day moving average is about to cross the 200-day moving average for a golden cross. However, it is not a bullish golden cross because the 200-day moving average is not in an uptrend with the 50-day moving average, in an uptrend breaking above it. Now, if it breaks above, you got a golden cross. But what needs to happen then is either the 50-day moving average is going to have to recross back down below it and then recross back up it, and hopefully the 200-day moving average will be moving up with stocks moving sideways. Or after the 50 crosses above the 200-day moving average, prices will test the 50 and or 200-day moving average and then move up. If the 200-day moving average then turns up and the 50-day moving average is moving up, and it's already crossed, that is then the bullish signal. So right now, there still is not a bullish signal in the NYSE, and even if they cross tomorrow, there will not be a bullish signal quite yet. But right now, it's all looking good. It pulled back right to near the 50 and 200-day moving average, and drawing a horizontal support line to see where we're matching up here in conjunction with other prices. You can see where we're at. So we basically, what we did was we held support of May minus that little dip out. Remember when there was a breakdown, and then immediately we broke right back up it. So if you ignore these 4 days, this is the support that is finding itself on right now. Higher volume than the day before. Technically, once again, it's a distribution day. That now makes this 1, 2, 3 distribution days in a row and gives 1, 2, 3, 4 distribution days and 1, 2, 3, 4, 5, 6 sessions. Not bullish. The only good news is that look at the volume well below average, and the rally came above average. So that's showing excellent positive divergence. I can also be seen in the S&P 500. As you can see, the price pull back, find support right at the 200-day moving average. And the 50-day moving average is further away. But like I said, they're going to probably meet up with each other and going to have to dance around a bit. And whenever the 50 crosses the 200-day moving average with both in an uptrend, that's the golden cross that you're going to be bullish on. Or if the 50-day gets above the 200-day moving average is still in a downtrend, you'll get bullish as soon as the 200-day moving average swings up. So the S&P 500, once again, 1, 2, 3, 4 distribution days. In the past, 1, 2, 3, 4, 5, 6. That's not good, but overall, not that bad either. Volume's below average. It is technical distribution day, though, for the New York Stock Exchange, not the S&P 500. Why? S&P 500 was not down 0.25%. The NASDAQ, on the other hand, was higher today. Higher by 0.66%, making today a technical accumulation day. However, look closely at the price pattern. Whenever we start to roll over, you can see that we hit a high on high volume, and then basically went nowhere. We gapped up higher, but then it ended kind of flat on below average volume. Then we ended down again, barely on lower volume, still looked good. Then we rallied again on strong volume, looked good, but below average. Then we had a down day, higher volume. There's a distribution day. Tried to get back on higher volume, but look at the negative tail intraday. So even though we were up 0.5%, the fact that we reversed so far off the highs was bearish. And now, as you can see, we dipped down. Tail. Bullish intraday means that the selling wasn't that intense. Pretty bad day right there. Higher volume than the day before. However, it's below average. And then today, once again, it looks like that we did more work in the bottom range than the top range, and we got a bigger tail on the top than bottom. However, it still could be possibly hinting that it's going to try to hammer out a bottom pattern here. But I'm not too sure. I'm kind of mixed right now. And why I'm mixed right now is because short-term trend is down. Intermediate term, it's up. Sub-intermediate term, it's up. I'd say long intermediate term, sideways from here to here. And then long-term, down, no matter if you want to start at 08 or June. Let's do June. So it's down. So as you can see, up, down, sideways. And then if you want to do an ultra short-term move, then now we're up, since we're up on today. Still, overall, almost an inside day besides breaking down intraday to new lows. but coming back at 0.66% up is probably pretty good for the NASDAQ. See how the 600 did? 0.66 gain, awesome. Once again, finding support at the 250-day moving average. And this uptrend line, as you can see, it's right down here, and it actually, there you go. So it's finding support right on that uptrend line. Go and get rid of it, redraw it. So we got plenty of support coming up for the S&P 600. So these are all bullish. Let me go and pull up the IBD 100 index, see if we can get that for you. IBD 100 daily session. Nope, it's not showing anything yet. It shows it flat with no volume, so we can't go into detail of it. That's why I normally like to wait till later on so I can have everything updated. Let's see the updated platinum. Platinum slightly down today. However, look at the bullish intraday reversal. I got it already maxed out on the chart, so it's even smaller like this. So overall, okay. Silver, very bullish day, finding support right at the 50-day moving average. Thank God if you're a commodity bull, or dang it, if you're looking to get lower prices to buy, like me. However, silver isn't really what I want. What I want, of course, is gold. And gold is bouncing. I'm already long gold, of course. However, like I said, I don't mind having it pull back on me and get more at 800, get more at 850, get a lot more at 700. I don't know if we'll ever see 700 again. 700 is what I'm using to mark like the November low, 699. I know, I knew I should have bought a lot there. 698 low, 691. Can't get below 690, and 700 is where I wanted to load up, but I didn't. Started to buy it in 2009 again, all through January to March. Multiple bullion buys, other bullion buys before, but I don't want to disclose where it's at because it's good for me right now. And then gold right here bouncing at 39. No matter what, a couple quarters from now, I'm going to be buying gold. I don't care if it's at 1,000, 900, 800, or 700, or even 1,200. I still want it. Why? Because I don't trust this stupid United States dollar anymore. It broke below the first uptrend neckline, which is connecting the lows here through the March and April lows, and you can see it cut it all the way back here. And if you would have done that, you would have had yourself a nice 7% gain on the dollar, 50-to-1 margin, whatever some of you traders use out there for commodities. It's over a 300% gain in less than 2 months. Very nice. Then with a true neckline all the way across, however, it's a very big neckline because the shoulder, head, and shoulder is such a big pattern. Breaks down below it, however, rallies back. Little tail each and every session. Look, baby tail, baby tail, baby tail, baby tail, baby tail, baby tail, baby tail. No tail, almost an engulfing pattern. Baby tail, small tail. So it's been very bullish. And here's a short-term uptrend that you can use to play it. And here's kind of the channel that it's in also. I'm going to move it up because that's not right, obviously. So there we go. Move it up there. So there's the uptrend channel that it's currently in. You're going to want to buy at the, if you're on an intraday basis, you'd buy at the top, or you would short at the top, buy at the bottom, short at the top, buy at the bottom, and then a breakout above this line, you'd reverse your short into a buy as it would move higher. All right, I'm going to go and wrap it up there. I'm going to be back with part 2 for my subscribers and a part 3 for my subscribers because part 2 and 3 took so long to do the partial sells, full sells, and new longs and new shorts yesterday that I didn't have a chance to look at the charts. So we're going to do that after this. All right, everybody, I'll be back with part 2 and part 3. I hope you're having a good time and surviving this very rough market. I know a lot of people made profits in March to April and May, but I'm not stupid. I know a lot of these newbie day traders that just came out of the woodwork out of nowhere in March after having a horrible 2008, believing that the economy's bottom and Barack Obama's the president. I'm going to start day trading. Kind of scary because they're so smart and they're really bragging really hard right now. However, I know 2 professionals very well. I know a few of the Street.com professionals very well as former colleagues of mine. And I got to say, none of us are killing it. None of us are killing it. It seems the guys that are killing it this year got their asses handed to them last year in 2008 and or are fresh out of off the boat in this market. They've never invested before full time. And damn it, this is the time to start investing because stocks are low. I hope you're right. I'll be back with part 2, part 3 to see if that can be right. Aloha.